Hello, students. You are welcome to class. You are welcome all to Starry Academy. I am Ogunowo Abdulgani, your lecturer for this class. I'm taking you on financial and tax analysis. Okay, financial and tax analysis. Uh, in this course, we have 6 topics. Okay, which are splitted into 6 chapters respectively. Okay, so we are starting with chapter 1, which is a framework for business analysis and valuation using financial statements. Framework for business analysis and valuation using financial statements. Are we together? Okay, so in this course, we at the end of this course, you should be able to understand comprehensively framework for financial statement analysis and financial reporting, and the important strategy points for the analysis of financial statements, purpose of accounting analysis to evaluate the degree to which firms accounting is captured in business reality, and the ability to understand analysis required to adjust a firm accounting numbers using cash flow information. Then you should be able to summarize the view developed in the analysis with an explicit forecast, and also you should be able to assess performance of a firm in the context of its stated goals and strategy. And likewise, you should understand forecasting at first and second stage of prospective analysis and valuation. Okay, under this topic, which is our chapter 1, we shall be discussing the role of financial reporting in capital markets, and from business activities to financial statements, and influences of the accounting system on information quality. We are also discussing alternative forms of communication with investors who are shareholders of companies. Okay, shareholders, they are the existing investor, and potential investors. Okay, potential investors. So existing investors includes institutional investor. Okay, and the likes. Are we together? Now also we shall be discussing public versus private corporations. Are we together? So without wasting much of our time, we shall start with the role of financial reporting in capital market. What are the role? Okay, or what role has financial reporting comes to play in what in our capital market? Okay, what role does financial reporting play in what in capital market? Okay, so the capital market refers to interactions among firms or organizations with funding needs and investors with surplus funds for investment, whereby firms raise debt and equity capital for their operations, and investors make funds available to firms either in the form of debt or equity investments at a return. I take it again. Capital market refers to interactions among firms, or organizations. Interactions among firms or organizations with funding needs. They are in need of funds, okay, to finance that activity. Okay, so it's an interactions among firms or organizations with funding needs and investors with surplus funds. Okay, so these are we have two elements. Okay, we have the firms or organizations. Okay, firm or organizations, and investors with surplus funds. Okay, investors who are ready to invest. Okay, so investors with surplus funds for what? For investments, okay, whereby the firms raise debt and equity capital for their what? For their operations, okay, and investors make funds available to firms either in form of debt or equity investment, okay. So they make uh funds available to firms, okay, by being what? A debt holder or what? An equity holder. Are we together? A debt holder or an equity holder. So a capital market is what? Is a financial market in which long-term debt over a year or equity backed securities are bought and sold, okay. So capital markets channel the wealth of savers to those who can put it to long-term productive use, okay. It channels what? It channels the wealth of savers to those who can put it to long-term productive use, such as companies, governments, making what? Making long-term investments, okay. So financial regulators like what? Like Securities and Exchange Board, okay, or I should simply put, we should use Nigeria as a case study, okay. The Nigeria Stock Exchange, okay, and some other exchange commission or abroad or overseas, okay. So they oversee what? They oversee capital markets what? To protect investors, to protect investors against what? Against fraud, to protect investors against fraud among what? Among their duties. So a capital market can be either a primary market or a secondary market, okay. So in the primary market, new stock or bond issues are what? Are sold to investors, often what? Often through a mechanism known as what? Known as underwriting, okay. So the main entity seeking to raise what? Seeking to raise a long-term funds or on the primary capital market are what? Are governments. The main entity seeking to raise long-term funds on the primary market are what? Are governments, which may be municipal, local or national, and business enterprises, companies, okay. So government usually what? Only bonds, whereas companies often issue both equity and what? Both equity and bonds, okay. Because government bonds or government well, yes, let's take it that way. Government bonds are what? Are risk free, okay. So people do prefer to what? To invest in government bond rather than what? Investing in private bonds, okay. So the main entities, the main entities purchasing the bonds or stock include what? Include the pension funds, okay. The main entity purchasing the bonds, okay, include what? Include pension funds, such as pension fund as administrators, and some other private pension administrators, okay. So we also have hedge funds, okay, sovereign wealth funds, and what? And less commonly wealth individuals, okay. Individuals and what? And some investment banks and what? And investment banks, okay. So investment banks that are trading on their own behalf. So while in the secondary market, existing securities are sold and bought among investors or traders, usually on what? Usually on an exchange or over the counter or elsewhere, okay. So the existence of secondary markets increases the willingness of investors in what? Investors in primary markets. It increases what? It increases the willingness of investors in the what? in the primary markets. Okay, so as they know, they are likely to be able to swiftly cash out their investments if the need arises, unlike the secondary uh, market. Are we together? So the secondary market exists uh, for the purpose of us for the purpose the secondary market exists or is in existence, okay, in order to increase the willingness of primary investors, okay, willingness of primary investors, as they know they are likely to be able to swiftly cash out their investment uh, if the need arises, okay, if the what if the need arises because of the complexity involved in selling or exchanging of secondary market instruments, okay. So now is a second important division falls between the stock market for equity securities, which is also known as shares, where investors acquire ownership of companies, and the bond market where investors become what where investors become creditors. Are we together? So financial reporting provides much needed information to capital market participants. Financial reporting provides much needed information to capital market participants, such as relevancy and reliability of financial information, which is essential for the functioning of capital markets, okay. Other information what they provide for capital market participants is what is relevant and reliable financial information in which is essential for the functioning of capital market. They also provide information such as that financial intermediaries depend upon the information in the financial statements to evaluate investment opportunities. Also, information by entrepreneurs to investors is not completely credible, because why? Entrepreneurs have an incentive to inflate the value of their idea because of their business objectives, okay, business objectives, which is most time what is profit maximization, which is most time profit maximization, because they want to maximize their profit. So it is likely that they manipulate figures, okay, or it is likely that they window dress their financials, okay. So because of that incentive they have to inflate the value of their idea. So also financial reporting provides information needed to capital market participants in form of in such that financial intermediaries can assure the quality of the financial statement representations, because financial statements are prepared in accordance, and it is audited, of in which the auditors that must have given his assertion, okay, must have reached a conclusion, okay, must have given his judgment on the reliability, uh on the truth and fair view assertion of the financial statement, on the true and fair view whether the financial statements are constitute material misstatement, okay, or whether it is free from any material misstatement, okay, and has been prepared in conformance with the regulatory financial standards. Are we together? Okay, so